Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today's topic is going to be on bank account and its clearing accounts. Before we get into this concept, I just wanted to brief you how a traditional bank account reconciliation used to be prepared. When we studied in our plus one, plus two, or even our graduation, how we used to prepare a bank reconciliation statement. We used to maintain our own bank account. That is for sure. Everybody used to every company used to maintain their bank account. So let us say I have a bank account. What transactions you post in debit side of the bank account? All receipts. What transactions you post in credit side of the bank account? All payments. So you keep posting these receipts in debit side and posting payments in credit side of the bank account. Right? Once this is done, by end of the month, we go and get the bank statement from the bank. Bank statement is what? Passbook. We get our passbook or we get our bank statement. What do you mean by bank statement? Bank statement is nothing but our account in the bank. Right? We get passbook. Let us say we get passbook from the bank. Passbook, bank statement or passbook. Let us say bank statement or passbook we get from bank. So there will be a debit and a credit here as well. Here in passbook or a bank statement, you see payments in debit side, receipts in credit side. Clear? So what do? All receipts posted in our bank account will be matched to the all receipts posted in passbook credit side. Whatever payments posted in our payment side of the bank account will be matched to the payments recorded in debit side of the passbook. This is how we do the comparison, matching. And after matching, we start ticking, right? Okay, I have one receipt here, the same receipt is already posted in passbook. I have one payment here, the same payment is already been posted in my passbook. So we match like this and we identify some of the transactions posted in bank account, our bank account, but not appearing in bank statement. Some of the transactions posted in passbook but not appearing in our bank account, right? So we identify these kind of transactions and we prepare a bank reconciliation statement. Balance as per passbook, add and less. What are the transactions we add? What are the transactions we less? We have some methodology how to add how to identify whether this transaction has to be added, how to identify whether this transaction has to be deducted. There are different lecturers will explain how to do that. I'm not getting into that anyway. I'm going to start bank reconciliation as a chapter maybe in coming days. So that time we will talk about that concept later. But right now we prepare we just need to understand how the bank reconciliation statement has to be prepared. So in this, what do? We generally identify checks issued but not presented, checks received but not deposited, bank charges debited in passbook but not created in our bank statement, bank account, interest credited in passbook but not debited in our bank account. So there are many transactions we identify like this. We prepare the bank reconciliation statement and we will start working upon those transactions to be posted. If it is not posted in bank account in our books, we will post it. If there are some transactions not updated in the passbook, we will go to the bank. We will ask banker to update them in the passbook to make sure that our bank account balance and passbook are matching. That is how a traditional bank statement is to be prepared. I'm not getting into very detailed analysis on this because, as I said previously, I'm going to start CA foundation, and plus 1 plus 2 classes very soon, maybe starting maybe February or March. I'm going to, once the academic year starts, next academic year, I'm going to start those classes. That time I'm going to explain this chapter in detail, but right now just to make you understand how the traditional bank reconciliation used to be prepared, I explained this. Okay, now let us understand, do we follow the same methodology in our corporate environment as well? Yes, more or less the same. More or less we follow the same methodology. But one small difference here is we generally maintain a bank account, and we also maintain a clearing account along with the main bank account. For example, if I have one bank account, I will also have clearing account along with that. In every bank account, as I said previously, you start recording receipts in debit side, you start recording payments in credit side. That is how you prepare your bank account, right? These clearing accounts also, in general, there are companies, what they do is, for receipts, they maintain one clearing account. For payments, they maintain another clearing account. There are companies, they don't maintain, receipts separate clearing account and payment separate clearing account. They maintain only one clearing account where one leg will be posted in main bank account and other leg will be posted in clearing account. That is how they maintain. Now we need to understand why this clearing account concept is being brought in here. We need to understand that. Right? So I'll explain this concept with the journal entries so that you can easily understand. Right. Now, what is that we understood now? In multinational companies, there will be a bank account, and every bank account will have clearing account as well. Clear? Right. How this concept will go? You have your SAP, whatever ERP, right? You also will have bank portal. Your bank statement will get updated in this bank portal. Nowadays, banks are updating their bank statements of these companies in their portal, and every day by end of their hours, bank hours, the bank statements of that particular day will be available in the bank portal. There are two ways of looking into this. If the bank statement is already available in the portal, bank portal, if your SAP supports mapping to that bank portal, your SAP support team can do the mapping between SAP and this bank portal, so that this bank statement, as and when it is uploaded in the portal by the bankers, that will get uploaded in the SAP. Automation. You don't require to manually upload them. If your SAP supports, if you could map this SAP with the bank portal, as and when the bank statement is available in the bank portal, your SAP at backend, it will go pick up the bank statement and it will automatically upload it to SAP. That is one option. Second option, if that SAP doesn't have the facility to go and map it to your bank portal, or if the bank portal is not allowing you to map it, you can extract the bank statement from the portal and you can manually upload them into SAP. You can manually upload them into SAP every day. This has to be done on every day. So you download the bank statement and you upload them into SAP. That is the second option. There is a third option also. There are cases where I have seen, even if you download the bank statement there is no option available for some companies in SAP. There is no option available to manually upload the statement into SAP as well. Those companies, very limited. I have seen only one company so far in my experience. I don't want to name those companies. That company, what we used to do is we extract the bank statement. We don't have a facility to upload them into SAP. We cannot upload. What we do is we used to prepare all receipts one journal entry, all payments in the bank statement in another entry, and these journal entries will be uploaded into SAP. That's the third option, but very few companies, very, very less companies will follow this. So let me repeat again. There are, I can say initially I said two. Now with this manual journal entry upload, you could say there are three options available. One, if your SAP supports and if bank portal also supports, your SAP can go get the bank statement from the portal and it can be uploaded. First option, automatically. You don't require to do. It will happen at a back end. If that option is not available, if bank portal is not allowing your SAP to go and read that bank statement, there is another option. You download the bank statement on daily basis. Your backend team, your SAP backend team will pick up that bank statement and they manually upload them into SAP. That is the second option. The third option, if there is no upload option into the ERP, into SAP, you just need to extract the bank statement from the portal, keep it in our local drive, prepare the journal entry for one journal entry, line item wise for receipts, one journal entry, line item wise for payments, and upload the journal entry into SAP. That option is also available. So how this bank reconciliation will be, bank statements will be uploaded? There are three ways, all the three ways I explained to you. Now, what will happen once the bank statements are automatically uploaded or manually uploaded or journal wise you upload? What will happen? That we will discuss now. Let us say in all the three ways the entries are going to be common, guys. So let us not split this into different ways. Let me first talk about journal entries. Let us say first concept I am taking, automatically the bank statements got uploaded into your SAP. Let us take that as an example. All the three options, the same procedure is applicable. Same journal entries are applicable. First, as soon as the bank statement gets uploaded into SAP, all payments line item wise, system will post one journal entry. You know what is the journal entry? It will debit clearing account and it will credit your main bank account. This entry is for what? For all payments. Line item wise, automatically SAP will post that entry. Majority of the R2R folks, when this entry get posted automatically, they will not get to know. But they need to understand, this is the entry will be automatically posted by the system. For all receipts, one entry will be posted, line item wise. You know what is that entry? Main bank account debit and clearing account credit. Why main bank account is debited here? It is a receipt. All receipts will be recorded in debit side of your main bank account. That is what I explained previously, right? So, since this is the receipt, all receipts are being debited in main bank account, hence I debited main bank account. And other leg should go to clearing account. Similar way here, why main bank account is created for payments? As I said previously, all payments will be recorded in credit side of the main bank account. It's a payment, outgoing, right? So your bank account has to be credited and your clearing account has to be debited. These are the two entries posted by the system as soon as the bank statements are get uploaded. Now, once these entries are posted, if you see your main bank account, it will have receipts being recorded in debit side, payments being recorded in credit side. This is the reflection of your bank statement. Your main bank account is a reflection of your bank statement. Whatever is there in the bank statement, it will get posted into main bank account. It's a reflection. So what is that you are supposed to do by end of the month? You just balance this main bank account and match with our bank statement. Whether these two balances are matching or not, you just match them and leave it. As soon as, obviously they will get matched, because you are posting as soon as the bank statement gets uploaded. These are the two entries being posted. It is a reflection of your bank statement. Obviously your main bank account will match with your bank statement. So you just need to match them and attach the bank statement as evidence, and your reconciliation gets over. There is no big issue. That is the reason in my previous video I said main bank account need not be cleared. Main bank account can be continued as non-open item managed account, because it is just reflection of a bank statement. You just go download the bank statement, compare with your main bank account, it will automatically match it. You don't see any differences. But you need to reconcile the clearing account. You need to reconcile the clearing account. What are the journal entries apart from these two, whatever I explained now? What are the other journal entries being posted in clearing account? You need to understand. And how to match these two entries with the existing entries already posted in clearing account. Make sure that you match them, and it is your responsibility to ensure that clearing account is zero. Clearing account balance is zero by end of the month. If that is not zero, you need to identify which are those transactions causing the difference, and you need to identify them, do the follow-up, and rectify them in the system. So I'm stopping here. Is already 17 minutes. I don't want to extend this beyond 17-18 minutes. The video is going beyond our timelines. So I will update the other journal entries. What are the other journal entries being posted in clearing account? How do we match those entries with these two, and make sure that clearing account is zero in my next video. Right? If you like the content, please like the video, subscribe to my channel, and share this video with other friends and colleagues. Thank you so much.